Hey there, this is Dean O'Dell with 7 Gables Real Estate and the O'Dell Group. Today is January 12th, and we are going to be looking at the Orange County housing data. Welcome back to a new year, and boy, is it going to be a different year than what we've had the last couple, right? So let's go to the charts now and let's talk about what we're seeing out there. Here we go. All right, so looking at the first housing chart, this is the active listing inventory year over year, and we don't have a straight line or any kind of line yet. We have a blue dot, okay? The blue dot is this month, January of 2023, so let's start right there. You'll see we currently have 2,530 homes on the market. That's a decrease of 112 homes in the last 2 weeks. Last year at this time, there were only about 1,100 homes on the market, which is 57% lower than where we are today. So, comparing that to a more normal market, we'd like to take a look at the 3-year average between 2017 and 2019, which was more like 4,506 homes on the market. So we're expecting to see the listing inventory slowly rise throughout the year until it peaks in July and August, and we're going to see lots of homes coming on the market in March. Despite the market that we're in and the interest rates that we are at, we are anticipating the typical seasonal trends that we normally see in the market. Okay, so let's look at the next chart, which is demand. Over the last 30 days, we've had about 900 homes go into escrow. That is down 138 homes in just the last couple of weeks. This is the lowest demand reading since tracking started in 2004. Last year, the demand was at 1,295, and that was 44% higher than where we are now. And prior to 2020, the 3-year average was 1,349, which is 50% higher than our current demand. The low demand we are seeing today is due to very few homes being available on the market, as well as higher mortgage rates. We can expect demand levels to climb as the inventory rises, and they should drastically improve over the next couple of months. However, as long as rates remain above 6%, demand should remain muted. When they go below 6%, demand will improve. The next chart we're going to look at is Orange County expected marketing time year over year. This is what tells us what the speed of the market is. And what we're seeing right now is we're getting very close to a balanced market. Our days on the market for Orange County is 84 days. This means the overall market is slightly a seller's market, which is a lot closer to a balanced market than we were last year when we only had 25 days average. The 3-year average prior to 2020 was 104 days, which is slightly lower than we are today. So if you're seeing headlines about how houses are taking longer to sell and how that means we're headed to a housing crash because of it, that is historically inaccurate. 2021 and 2022 had marketing times that were unprecedented. Anyone who is saying 25 to 40 days is a normal marketing time to start the year has not been in the business long enough, or they are just using fear tactics. The amount of time it takes to sell a house right now is very normal according to the housing trends prior to 2020. Now, let's look at this next chart, which is the expected marketing time broken down by price range. If you're buying or selling in Orange County, this is the best way to see what's going on in your price range. As you can see, the expected marketing time last year versus this year has increased in every price range except for homes priced over $8 million. You'll also see the various market types reflected in all of the different price ranges, with anything up to 1.5 million being in a slight seller's market. Between 1.5 to 2 million is a balanced market. $2 to $4 million is a slight buyer's market, and anything above $4 million is a deep buyer's market. As I've said in other charts, a lot of the changes have to do with regular housing trends and the time of the year that it is, but they also are being impacted by our current interest rates. So let's take a look at how we are starting this year in Orange County versus the past in this next chart. Comparing this year with the past, notice what the norms were prior to 2020 and all of what's happened since the economy was basically shut down. The market is normalizing, it's returning back to normal for expected marketing time, suggesting we are near a balanced market. What's very perplexing is the lack of affordability, which is cutting demand, and that has yet to be offset by enough supply to tank prices. Because so many sellers are comfortable and secure financially in their homes, we are just not seeing the inventory come on the market that we are used to. Remember, demand is down by 50% historically, but our supply is down by 57%. The market is really close to being balanced. It just feels sluggish because there's not a lot to choose from and not a lot of activity going on. So you may want to freeze this chart right now and really study these numbers and, compare them with what you're reading and hearing in the headlines. Nobody really knows where this market's going to go yet. I mean, they're crystal ball gazing. Let's talk about what we have, what the data says. That's what we're showing you. Okay, so let's wrap this up, and I'm going to give you my opinion on what I would be doing as a buyer or a seller at this point. Okay, a lot of times I like to close these things with a little story, so I'm going to try to be quick here, okay? I'm going to tell you one that happened over the last few weeks. We had put a home on the market prior to the Christmas holiday, and it was right when everything was slowing down, and we knew that, there's going to be this little recovery that's going to have to come out of January before the market picks up. Well, I had everybody lowballing offers during the last couple of weekends in December. Everybody's trying to see if they can get something. I kept saying, you guys, this is a good house. I mean, this is in a price range where it's very active. It's not like multi-millions of dollars. There's a lot of buyers for it. It's just we know that, this is the time of year that people are traveling, they're doing things, this, that. But we had the house on the market long enough to know that we probably just need to reduce the price a little bit. So we reduced this price down $35,000, okay? And the house was listed at $1,315,000 after the price reduction. Now, just to tell you what happened after that, we had the house open because it was vacant. So we had the house open through this entire last weekend. We had probably more people come through on the last weekend than we did all the previous weeks combined to see that house. We ended up with 3 multiple offers, and we're negotiating those out right now. So the lesson here, guys, is you have to understand what a normal market is. You have to understand what the right pricing is. As a buyer, you just can't think you're going to go in and steal something in this market. Yes, prices have settled down and they've even gone backwards, and that's good, but sellers understand that the interest rates are really high right now. For somebody to buy a house, even at $1,350,000 with 20% down, their house payment is going to be almost $7,000 by the time you do principal, interest, taxes, and insurance. So you have to sympathize for these buyers, and that's why we need these rates to come down a little bit further before things really start to feel like the buyers are willing to buy. The buyers are out there. This is an affordability issue right now. My personal feeling is when rates get closer to 5%, that we're going to see things really pick up here. And they're headed in that direction. They were at 7, they're now closer to 6. So you know what? Hopefully they continue to float down as the economy comes back here from inflation. Hopefully inflation tames down. So I think we're going to see an adjusting market this year. But guys, if you think the market's going to entirely implode, there's just no data to suggest that. The sellers have a lot of equity. They have low mortgages. There's no distress in this market. Don't be waiting for foreclosures in that market, because I think you're going to be waiting a long time. So buyers, let's just look at this market. Let's see if we can find you something you like. There's good product out there. You've got less competition than you've had. And sellers, let's just be real about what the values are, okay? And what buyers are willing to pay for the house right now. You guys made a ton of money over the last few years on your house. Let's get you from where you are now to where you need to be. All right? So we'll see you on the next Tustin Talks. Thanks for tuning in. Bye-bye.